Hey there, folks. Greg Shepard here, S&A Financial Services. I specialize in helping folks just like yourself, assuming you're in higher education, basically just get the most out of your higher ed retirement plans. Been doing so for 20 years. Sometimes this stuff can get a little confusing. So, this case not really withstanding. I'm going to share with you, I just got off the phone with a client. She's been a client for 15 years, thereabouts. No, that's not true. Yeah, 10 years, thereabouts, since she's only 53 years old. Okay. So that's important in this conversation because we're talking about TIAA Traditional. And before I get going, I want to stress the fact that this is not investment advice. This situation is unique, and I've run across several folks, hundreds of folks out there in higher education. Each case is different, all right? There's not one size fits all. This situation just happened to work out for her, and we've implemented this strategy for other clients. I have implemented the strategy for other clients as well. So this is something for you to think about out there. If you need help, by all means, contact me. My contact information is down below. I'd be more than happy to help you out like I've done with several other folks across the country. Now, so let me give you, let's unpack this situation. She's 53 years old, going to be 54 here in about a month. That's important because she has $400,000 total, okay? She's at a university. She's been there for a handful of years. She's amassed, what was it, $150,000 at the new university. She has old monies, okay, old contracts, old employer accounts that we transferred over to an IRA, a rollover IRA, okay? In my case, what I do is I custody those assets at Charles Schwab. So Charles Schwab here, okay, and then the new employer, $150,000 in the new employer. She's a 70-30 investor, meaning 70% stocks, 30% bonds. Now, the 30% of that portfolio hasn't done well. Okay, the bond market. Now, if you're retired and taking income, this bond world that we're in is good because interest is very high. And so folks taking income, they're getting interest from these bond investments that I haven't seen in quite some time. She is not retired. She's 53. So she wants that 30% of her portfolio more stable and grow, but more stable. She doesn't care about the income, okay? That's important as well. So the bond portion of her account, both at Schwab and at her account at her new employer, which is with TIAA, this isn't doing very well, okay? And it probably won't do very well until the Fed at least cuts rates. At least the price appreciation inversely correlates with the Fed funds rate. So the Fed's not going to cut rates until you tell me. I have no idea. She has an RC contract. That's important as well. RC contract states that new money's going into the TIAA Traditional gets 6.5%, okay, on new money. Odds are, again, I don't know the future of the bond market, but odds are you're not going to get 6.5% each year in the bond market. So what we did is we did some math. So 400,000 times 30%, 120,000. She's got 150,000 in her TIAA currently account at her new employer, current employer. So what we're going to do is basically sell all of her stuff at TIAA, liquidate it, and then introduce $120,000 into TIAA Traditional. RC contract, that money is illiquid, okay? Now, let's back up a little bit. So 30%, 120,000, we're going to introduce to TIAA Traditional. Everything else, even the bond funds that are held over at Schwab, we're going to sell and have that account 100% equities. So total, she's still going to have that 70-30. But she has a Fidelity account as well. I won't get into, but we're going to have all of her bond exposure with TIAA Traditional, which represents 120,000 in this case. Everything else is going to be in equities. So she still accomplishes that 70-30 split, okay, just done through a few different accounts, okay? RC contract. Again, 53 years old, so the illiquidity part isn't as important if you're 63, 65, 66 years old. The only way she can get that money out, and we went over this, and she understands it completely right now, is upon separation of service, a 2.5% penalty. On the RC contract, gosh, I'll have to go to my rules again. But regardless, that may not be true on the RC contract. So let's strike that, okay? TPA for sure, 7-year TPA, transfer payout annuity, lifetime income annuity option, okay? So what we'll probably end up doing is prior to her retiring, I don't know, 3-4 years prior to retirement, we're going to initiate that 7-year TPA, direct those distributions inside her contract, assuming she's still with this university, and divvy it up amongst the investments within the contract. Not take it out of the contract, okay? Keep it in the contract. and then take the monies out in totality once she retires. Or maybe when she retires, separates from service, direct that TPA to a rollover IRA. Regardless, she doesn't need that bucket of money, that 30%, immediately. So the 7-year TPA for her isn't that big of a deal. Okay. Also, remember, she's 53. So new money going in is making 6.5%. Folks, this is compounded on a daily basis in that TIAA Traditional. All right. So for her, it's really going to, it should work out. In she kept asking me, what's the downside here? The downside is the illiquidity. Okay, you have to understand the illiquidity part. Okay, also her costs are going to go down. It's not a bad thing. Okay, that's a pro. Her costs are going to go down because those bond funds that she was in, they have an expense ratio. Okay, now TIAA Traditional is not free, but in order to calculate the costs, it's very difficult and complex. But nonetheless, her costs are going down. So this strategy really is going to work out for her. It should long term. Now, don't you go out there and do this tomorrow, okay, folks? Get some professional help. Contact me. Contact an independent fee-only advisor that specializes in higher education retirement plans. Contact TIAA directly. They'll do their best. They're not your fiduciary advisor, but they'll do their best to guide you through some of the nuances of TIAA Traditional. I can't think of much else. Like I said, I just got off the phone with her, so I wanted to record this video while it was fresh in my head, folks. Greg Shepard here, S&A Financial Services. Go out and have a good one. Take care. Bye-bye.